Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody has an amazing, amazing day as we're about to get rolling on what we do each and every day, identifying potential breakouts and reversals from an educational perspective. So if you guys are brand new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all that fun stuff. And if you're regular, do me a favor, hit the thumbs up icon. Means a lot, helps the computers to know that people are actually watching and paying attention. And then also don't forget to hit the share button and share this link out on your social media. Okay, let's go ahead and get rolling. So starting today with the S&P, John, I didn't even look at your comment on Twitter yet, John, but I appreciate that. Okay, I thought the article was kind of interesting. So, all right, so looking here at the ES today, we are up about 4 points. The NASDAQ today is down 15. Now, we spoke yesterday about the fact that this was a very suspect supply level, and we were trading in a counter trend environment. So were we overly surprised that the market went through that area? Hey, Tom, well, I'm glad you got the chat working. So since that was not an overly strong supply area, I didn't anticipate it holding all that well. And so we set in a brand new all-time high and got a little bit of a pullback from that level. And so, when we have an all-time high, we basically have a standing breakout trade above the all-time high. Standing breakout trade above the all-time high definitely does still exist. I want to throw a quick picture up of volume profile. And, the way I like to use this is I like to look at over the last 20 days. And I'm going to go to a 20-day picture here, looking at the last month. What it tells me is that these normalized pictures show me where there was the most volume. Now, what this does is this highlights where the highest volume was. But the reason I wanted to pull that out is because when I look at yesterday, what I'm specifically paying attention to is the fact that right here, where we had that decrease in volume as price went up, not overly shocking, then we picked up a fair amount more right through here before then kind of continuing our move a bit higher. Now, I don't use volume profile in the daily market commentary very often, but it is an interesting indicator to when it lines up with quality areas of supply and demand. Okay? So I'm looking at the fact that we had an increase. I mean, it makes me like this level down here significantly better. But I definitely do appreciate this area right here a bit more than I probably normally would. And to be the most conservative, I would wrap my lines here around 36.65 by 36.72 on a pullback. And then on a 15-minute chart, there is reason to consider this little wick over, whoops, that's not what I meant to do. This little wick over wick right here. Now, the level is ultimately what makes the decision. I'm just utilizing the volume profile as a tactical reinforcement and helping me to say that that could be a decent area for a price reversal. Okay? So those are the levels that I'm looking at today in that with those few areas. There's not a lot, we gapped up yesterday after the market had closed, but I think if I've said it once, I've said it 1,000 times. I don't normally like to trade the gap areas on a fade, on a reversal back to the gap origin in the futures markets. I don't see that as typically a great setup. Now, if those of you that wanted to try the gap and go last night from the gap up, we never got above the first candle's high, so there was really no reason to do the gap and go or really to even consider entering into the gap and go. But the gap and go is basically what our breakout trade is, right? Above that high. So now the NASDAQ today is down 13 points as we broke out kind of above that high. We came really close to our fill yesterday on the 15-minute chart. Unfortunately, did not get filled on that position. Those of you that were a bit more aggressive and you took the level on the hourly chart, maybe you got filled. Now, 15-minute chart still has some validity to it. I just have to switch it to a confirmation style entry at this point. and looking at my demand areas below me, if I slide to the 15 and I look to the areas that we created yesterday, we do have a couple of decent levels down here. This being probably the most obvious and the one that's a fair price value. This one down here being a little bit, so this area down here is a little bit lower, but my problem with this area is let's just break down the anatomy of this area, right? So if I just think about it from, what does the anatomy of this area look like? I have price rallying up, and then we chop essentially sideways, right? We rally up again, and then we come back down again inside of this same piece, right? So let me do this real quick. I'm going to take a real quick snip of this chart, and so I can draw on it and tell you what I mean. Okay. So what I mean by that is yesterday we had price in here, and I'm looking specifically at this area right there. Let me zoom in on it so we can see it a bit more clearly. So in this area, we have a green candle, which means that price had come up, and then this red candle means that it came back down, right? So that right there tells me that that was a bit of a retest of this wick over wick. So that red candle right there is a retest of this wick over wick, thus making it lower probability. Price then moved away. Now, we moved away, but we had lower wicks on the move away. So those lower wicks that we had on the move away tell me that we had buying pressure. Well, we did move away from it, but then we came back down and we retested the area with this red candle. So what I'm essentially looking at here is the fact that these two red candles, this one and this one, show that we had almost immediate retests of these levels after they were created. Now, let's look at the level that I have marked above. And in the level that I have marked above, what do we see? Do we see something similar? Well, we see that price made it all the way up to here and then came back down, right? We got a little bit of a basing in here and then a move away. Now, I will say that you can argue that we had a retest of this level right here. So if you want to be more conservative and take a confirmation entry because of this immediate retest, I'm okay with that. But that's why I like the upper level better than the lower level, is that this is only one quick immediate retest, so I think that there's still some validity left to this zone. The other reason why I like this level is because it's right near where the area of resistance was in the past, right? So that and I know that it takes a little longer to break down, but that's how I process those levels in my brain when I see those wicks right in there right away. Okay? And for those of you that doesn't make sense, the more you watch it, the more you look at these levels, the more you'll see how those wicks are an important component of overall growth. Okay? Real quick, for those of you guys that just joined us, I know some of you just joined on that. Do me a favor, click the thumbs up icon. Make sure that people know that you like what you're watching. And then if you wouldn't mind, hit the little share button and share the link for today's live feed out on Twitter or the Snap Face or the Tweet Bug or what is it, Parler? Is that the new one? Whatever it is. All right. Next, the Russell. So looking at the Russell, we have a 4-hour uptrend that's very strong. It's up 11 points this morning. It is our strongest running market to the upside. And so when I look at this for a pullback area, the most obvious pullback area is probably here. But that's afternoon, not a great move away. Decent move away, but certainly, when we think about what we score, how we score our move away, right? When we score our move away, we take the angle of the move. So this would be a 90-degree angle. This would be a 45-degree angle. and this would be a 68-degree angle. And then we score it based upon the angle at which price left the level. Well, and the way that we score it is essentially, if it's down in this region here, it scores a 0. Here's a 1, and anything up in here is going to be a 2. Well, it's going to score a 0 on the move away. Now, a 0 on the move away automatically means that the highest score that it can have is an 8, right? Which is confirmation entry. Combine that with the fact that it was an afternoon, and I'm not a big fan of that. So I've got to go a bit lower. And when I go a bit lower and I take a look at levels, I see that I do have an unbalanced wick over wick right here at the prior area of resistance. Okay, so prior area of resistance on the left, unbalanced wick over wick right here. I wouldn't have been mad at you had you looked at that yesterday and said, you know, I think I'm going to take a breakout trade. Did anybody here take a breakout trade above this level because you saw that an actual breakout, which followed all of our rules, came into play? Because it did, right? 1 touch, 2 touch, basing immediately before the level, and then kapowie, right? We got a pretty good breakout out of that level. Let me turn my air conditioner on. It's hot in the house this morning. All right. Trent, good. James, good. I'm glad you guys saw that because that was the setup, right? I mean, that's the setup is a 1 touch, 2 touch. On the 3rd touch, we had basing and a very strong move away. Oh, good. I like to hear that. Makes me feel good. You guys are catching those levels. That's awesome. Well, now the retest of that area, I think, is where I would look for today's move if price comes back into there. Now, remember, if we get basing before the level, that's still going to be the KOD, but it is a decent level. Question around the drop base rally around the 1875 area. So you're talking this area right in here, my friend. My problem with this area is that this is not the authentic origin of demand. This is a retest of these areas here to the left, and it was already retested by this lower wick, right? So that's why I like the rally base rally just above it, which is located inside of this unbalanced wick over wick. I just realized if somebody tunes in and they don't know the language that I speak, I really sound like a moron. Wick over wick, candle to candle, rally base rally. I talk a lot of weird stuff. And then the Dow Jones, looking at the YM, same thing in the YM that we had yesterday with the S&P. Not overly surprised that we saw supply levels on a 15-minute chart not hold. Put in a strong overnight all-time high, so certainly we still have a standing breakout trade above that level. It is kind of a secret code. I would look back here as our decent reversal point where we have this little wick over wick area close to the pivot low. But I don't know that we're going to get that far of a pullback. We'll see if we get that far of a pullback. I mean, that'd be a 200-point drop, 250-point drop off today. So, listen, Amit, the kiss of death has saved me a hell of a lot of money on my day. Just don't forget the KOD, kiss of death. The House of Parliament. Well, listen, our congressional house isn't exactly the most sane place in the world either, John. Have you listened to some of these people? All right. And that's as far as I'm going to go on the political scope. All right. I'm going to share my grid to the trade feed. All right, next, let's move over and take a look at our energies and metals market. So crude oil yesterday, we had this area right here that we identified as a potential reversal point. And that potential reversal point, we were so close to getting in, right? And we didn't quite make it into that level. So when we get this close to getting in and we don't quite make it, what do we do to the trade? What do we do? Because that's an important rule as well that we want to make sure that we follow. That trade has to shift to a confirmation entry. Okay? Very good, Liz. Mesnock, William, thank you for that. Confirmation entry. Now, as a confirmation entry, that means that we can only get in if price comes halfway into the level and then exits the level, right? Well, when I go to a 15-minute chart, we can see that price came into the level and then violated the top of the level before giving us an exit. So this trade actually fell apart on us and gave us no exit. Now, going back to the 4-hour chart, our overall direction here is very sideways. So it's not exactly the cleanest setup of the market right now anyway. So not shocked that that level didn't meet entry. But I will say this. On an hourly chart, this swing was able to get us a new swing low, right? If this swing is able to get us another new swing low, then we'll start to see our trend changing direction in the 4-hour time period. Right? Right now in the 1-hour time period, we don't evaluate trend on the 1-hour time period, but I do evaluate when a level has created a new lower low, and that's what it was able to do, was to create a new lower low. So I'm not saying that the level is fully baked yet. I'd like to see a new lower low form, but even if it doesn't form, this area right here is a nice, clean little level at 46 by 46.08. That's a nice level. Okay? That's a very nice, very clean little level, but it's not completely baked as of yet. And what I mean by completely baked is, to me, this level might be better if we take a little bit more time for price to set in a new low. So when I say set in a new low, I'm talking about that if price can somehow drop to, if somehow price drops below here, right? So if somehow price drops below that level and we set in a new low, right? And price does something like this. Now all of a sudden, this goes from being a good level to being a great level. If we can create a new low below this swing low. That's really the difference, okay? Right now, it's not there. So the level's still pretty good, but when I look at this level today, if I want to take a look at this as a tradable opportunity as it stands right now, my stop loss on here, let me zoom in on this. So if I look at this as of right now, my stop loss would tell me that I would have to put at the tightest, my stop would be right above here, right? Out of the leg in candle. In reality, I'm better to put my stop up above the pivot. So that means that I'm going to have about this much risk in that position, right? Above the zone. So I've really got this much risk. So if I have this much risk, I need twice as much of that for a reward. Well, twice as much of that for a reward, that's about a 1-to-1. That's about a 2-to-1. I'm right now, I'm basing in front of the level inside of my 2-to-1 reward to risk area. Now, I don't need to hold out for 3-to-1. I'm okay with 2-to-1, but I'm not okay with less than 2-to-1, or really right now that'd be more like a 1-to-1, right? And so with the report coming out and this basing that close to the level, I don't necessarily love this level yet. I want to see some more movement. All right. Next is gold. So we talked yesterday about a potential breakdown out of this level in gold, showing that we had some weakness in the overall uptrend. Now, we did get overnight basing in that gold position. I will tell you, I was not awake to take that entry. If you were awake and you took the entry that happened here a few hours ago, you're 4 candles into it, doesn't mean the level's dead, because your stop would have to be above here. So you still have plenty of room to go before it hits your stop loss, but you're halfway through your 6 candle rule, and we've still not made a move, right? And so, like you guys know what I say. If she ain't winked at you by 10 o'clock, she probably ain't going to wink at you. So in that case, I'm probably not going to want to want to add to my position unless we get a lower low. Now, the thing that I will say that's kind of encouraging are these upper wicks that we're seeing. Now, this is a very early candle. This candle's very young. It's only 20 minutes into its 1 hour life. So, but selling wicks are going to tell me a lot, and I still think price can come down. If we get a reversal candlestick here as this candle, those of you that are not in the trade, if you want to take it, you can go with a candle-to-candle short. Your eventual target being just here above 1845, where I think that's a pretty decent area of demand. Overall, we are in an uptrend, and so you're better off still being a buyer than you are being a seller. Yeah, Jersey Trader, let's take a look at the GC zone 1830 to 1837. So you're looking at this area right here, right? So that is a pretty clean level, no doubt about it. This area right in here is the one that you're referring to. That is a rally-based rally above a pivot low. I chose to go with the wick over wick only because we had a little bit of resistance there in the past. If you want to be a little bit more conservative on an entry, but you still want to use both the upper and the lower level, you can take the upper level as a confirmation trade and the lower level as a limit entry, so that if price blows through that confirmation entry, now you still have your limit entry. And then if price hits that confirmation entry and we go halfway in, you may chance to get along. The downside of that is that what if price only does a touch and go off of this level? Well, then you just miss the trade altogether, which is okay too. All right. Nat Gas, we looked at Nat Gas yesterday for a potential breakout. We did not get the prerequisite basing here. Price poked below, and we got basing near the level, but not immediately in front of the level, and it was only on the second touch, right? One touch, breakdown. So not a true breakdown setup. And so what I would look for is still a breakdown below here, and I think it still has a strong possibility of occurring. And then where would my target be? Well, my target's got to be somewhere around this area here, right? Above that gap area, I think would be the eventual place where price has a chance to move. And then copper, nothing new to add since yesterday. Potentially we have a breakout above this high, but that would be really the only thing to add. Okay, let me share this grid, and I realized today that I'm going impeccably slow, and unfortunately I'm not going to be able to catch all of the markets today because I do have to run. All right, next let's take a look at our ags and see if there's really a whole lot to add to the ags, or if I'm just going to fly right through them today. In looking at them from what we talked about yesterday, I don't have a whole lot to add. That level of supply still remains intact. This area for a potential breakout still remains intact and hanging out. This area of supply here in wheat just barely missed our entry. So it's still valid. It's just got to be a limit entry. And then same thing with bean oil, as it just missed our entry. Now, I'm not going to, the difference with bean oil is I'm going to remove the level. And the reason I'm going to remove the level is because we based before the level and we nearly missed it. So I'm going to completely remove that one. I still think that you could have a breakdown maybe below this line or this area. Okay? So not a whole lot to add in lines today with the ags. Absolutely, Paul. Let me talk to that because that's a great point. I'm going to speak to that, and then I'm not going to have time to go through the currencies today, unless you've got guys that are just dying for me to look at one particular. But I want to speak to what Paul just asked about. So Paul said that, clarification, you speak to basing before a resistance or support level. One is the kiss of death, and one seems to be an enhancer. Can you clarify if it doesn't take much time? So it's worth clarifying. What it really comes down to is is it a reversal trade or a breakout trade? And this is really the key. So I'm going to show you where to look for it, Paul, just so that you can catch the video. If you go to the website and you go into the member access lobby, we already have a video on this, but I want to show it to everybody anyway because I don't know that I've got something on YouTube on it. But it's underneath advanced price study class. So if you go under advanced price study, there's an advanced price study class called Basing Defined, breakout trades and reversals. So this is the class you watch to kind of get the difference between the two. It's not a very long class. It's only 20 minutes long. But the thing that I would say that is just to kind of give you the 30,000 foot view is that there's two types of trades in the world, right? It's a good point. Thank you for that, Dennis. Good point. There's two types of trades in the world. There are reversals and there are breakouts. So when I'm looking at a trade like this, and I'm seeing a level up here, and I'm thinking, okay, I want to trade that level, that would be a reversal trade, right? Whoops, that's not what I want to do. There we go. So if I looked at there and said, okay, I want to trade that level when price returns, that's a reversal. And the reason it's a reversal is because I'm going to sell as it's going up. I anticipate a price reversing. Now, in the case of a reversal trade, the absolute worst thing I can have is basing before a level. Now, why is basing before a level so bad in a reversal trade? Well, if I have, let's say that I have basing right here. Well, what is that basing doing? It's eating up my buy orders, and it's eating up some of the sell orders that exist in this region. And what that does is it causes some of these sell orders up here to get canceled and removed from the queue. And so if we base in front of the level, what you'll oftentimes see is something more like this. And price breaks right through that level. The other thing, and Liz points it out very well, is that it limits profit margin. Let's say that I base down here. Well, now if I base down there, my target has to be the opposing area of demand if I'm selling at supply. So basing before the level is the kiss of death on a reversal. But let's say that we do have a reversal out of here, and it's a good reversal. You short it, and we get a nice little move away. And then we come back up to it again, and we hit it again, and we get a nice little move away. Now, every time we hit that reversal level, what are we doing? Every time we hit that reversal level, what are we doing to our number of sellers in that region? All right? We're reducing the number of sellers in that region. And as we reduce the number of sellers in that region, the number of orders that are in the queue get depleted. So those orders that are in the queue that then get depleted become they sit there as order flows that are no longer filled. Now, then so what I would do at this point is I would delete this line, and it would now become a potential what? Breakout trade. So now all of a sudden this trade becomes a breakout trade. Okay? You're awesome. That is right, John, the multiple colored pens. Now a breakout trade, if I get basing immediately before the level, now what I'm doing is I'm taking the time. Now I'm taking the time to allow those number of orders to fill up. And what it's doing is it's taking the buy orders and it's filling up more of those buy orders. And it's saying, okay, we're getting more buy orders in the queue and we're eating up all the rest of the sell orders. And so then we see that price has a better chance to rocket up. So to sum it all up, reversals, basing, bad. Breakouts, basing, good. And that's the real difference. So hopefully that answers your question, and makes it a little bit more clear, Paul, because and that's really the video. The video is a little bit more detailed if you want to go watch the actual video, but hopefully that answers your question. And those of you that are watching and have never asked a question, that hopefully will be a good one for you. So that's all the time I have for today. I will still post my equities charts to. I will still post my currencies charts to the trade grid, but that's all the time I have for today on YouTube. Tomorrow we will not be on YouTube with the DMC. Tomorrow we have a live trading room, and tomorrow's live trading room is going to be hosted by Justin Krebs. So you guys will get a chance to hang out with Justin. Tonight we are doing an open forum session. So tonight we have an open forum session at 7 o'clock. So join us at 7 o'clock on the website for our open forum session. Ask any questions that you want. And then we'll be here to kind of share it with you. So that's all I have for today, everybody. I hope you guys are having a great day. So talk to you soon. See ya.